Unsurprisingly, you have a lot of investors talking about Nvidia stock after the company reported its quarterly financial results on November 20th, 2024. In fact, you've had a lot of investors talking about Nvidia stock for almost 2 years now as the company's growth rate accelerated exponentially on the back of the rising effectiveness of AI. So in this video, I wanted to elaborate a little bit on the driving factors on what's leading to this growth for Nvidia, which is then leading to all of this investor interest for Nvidia stock.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
The product that Nvidia is selling right now, for the most part, is called the Hopper technology. And it's coming out with the next generation technology, Blackwell, as we speak. It's shipped out, it's starting to ship out this product as we speak, but the vast majority of its sales are still the Hopper technology. And the CEO said that the Hopper demand will continue through next year, at least for the first several quarters of next year. And then meanwhile, they will start shipping more of the Blackwells next quarter. It'll be higher than this quarter. And of course, the quarter after that is going to be higher than the quarter before that. So what it looks like is going to happen is customers are going to keep buying the Hopper technology because they're not going to have access to the Blackwell technology. And so they'll keep buying the Hopper technology over the next few quarters. And then as the company ramps up production of the next generation Blackwell technology, customers will start buying that and it'll offset some of the Hopper technology sales. But at least for the next few quarters of next year, the company expects demand for the Hopper to be strong and then for Blackwell to start ramping up. Now, the thing that's driving demand for NVIDIA's Blackwell and Hopper technology, which in other words is just accelerated computing, is the $1 trillion worth of computing systems and data centers around the world that are based on CPUs. And those are transitioning to GPUs, the accelerated computing chips that NVIDIA provides. And this is the shift that's driving the growth for NVIDIA. This is the fundamental factor driving growth for NVIDIA. And it's no end in sight here because of this technology that NVIDIA has created is so much better than that previous generation technology in both performance and cost. And so if you're a company that's right now operating on those older systems, it's more effective or lower cost of ownership to upgrade to NVIDIA's technology. So let's say you spend $10 billion on NVIDIA's technology, that gives you an overall lower total cost of ownership of operating these data centers than if you didn't spend the money on NVIDIA's technology. Because the older technology is not as performant, and so it takes more power to generate the same results, or the peak performance is not as high as what NVIDIA can deliver with its accelerated computing platform. So it's in almost all ways better than the previous generation technology. And that's why you have the companies that have these data centers that are operating these data centers. And it's mostly the large cloud providers, the large tech companies like Microsoft, Meta Platforms, OpenAI. I'm sure I'm missing a few here, but these are the large companies that operate these data centers and they're upgrading because for them it makes sense. It's just a better return on investment. And then what's interesting is that many of these AI services are running 24 hours a day, 7 days a week, just like an AI factory. And what makes these really excellent in terms of business performance is that once you spend money on the GPU, and once you spend money building out the data center, the maintenance and operations, you don't need as many people. It's not like a traditional factory, like when you're producing cars. You need a lot of people in there. You need a lot of materials to continue coming in there. Whereas with these AI data centers, these AI factories, as they are being called, you don't need all of those inputs. And so it generates better return on investment because you're getting these things and they're operating by themselves for the most part. They can be, you still need some people there, but in terms of the amount of people per square foot, it's a fraction of that of a traditional factory that's producing cars or semiconductors or beverages or shampoo or post-it notes, whatever the case might be that you're producing in your manufacturing facility. The inputs to outputs ratio is so much lower for these AI factories. And then the end market is arguably stronger than many of those manufacturing facilities that are creating physical products, because the output of these AI models are producing things that people really want, right? Better algorithms on YouTube, better algorithms on your streaming radio, better algorithms for Netflix to help you find a movie to watch in quicker time. Large language models that like ChatGPT that can help you with your homework, to help you with your studying, or to help you with whatever it is that you might be doing, getting your answers faster than you otherwise would. And so this is driving that growth for Nvidia. So even though the company's coming out with new technology, the CFO says that their gross profit margins can be right where they are today next year. And usually what happens with new technology is it brings down gross profit margins initially because the investment that's required to get these ramped up, and before they are ramped up, they are not generating as high of a profit margin because the cost per unit is higher initially before you ramp it up to full speed. And so the CFO says that we do want to make sure that we are ramping up and continuing that improvement in terms of our yield, the improvement in terms of the product as we go through the rest of the year. We will continue selling Hopper this quarter and in the next quarter for sure. So we've got a little bit of both happening in Q4, but it's possible for Hopper to continue growing along with the next generation Blackwell technology, and partly because I explained that Blackwell is sold out. It's sold out. So some customers that want to build these data centers or want these accelerated computing platforms, they may not be able to buy Blackwell, but even Hopper is so much better than what they had before that even if they can't get the latest generation Blackwell technology, they'll tell NVIDIA, fine, we'll take the Hopper. Like, we'll just take it because it's still so much better than the previous generation technology. And so they're expecting continued to both of their products to generate billions of dollars of revenue in the fourth quarter. And I wouldn't be surprised if that continues into the next fiscal year, because earlier in this conference call, management said that Blackwell is going to be sold out for at least the next few quarters. So customers that don't have access to that and they do want to upgrade and they do want some GPU technology, they will buy the Hopper. And some of the customers had been waiting for Hopper, but Hopper had been sold out. But now that the Blackwell is coming out, the priority customers are getting those next generation technologies. And so that's leaving an opening for some of the smaller customers to get access to the Hopper technology, and they're jumping on it. They're jumping on it. They're not waiting. They're saying, yes, we'll take it. Hey, everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.